I think one of the most fascinating things that have happened in the macro economy since 1992 is probably the rise of China. So China sort of came out of the 1980s on a reform agenda and then really slowly built on their success. And then I think it all culminated in around 2001 with the adoption of the WTO. And then fast forward 20 years to now, it's the second biggest economy in the world and really a powerhouse and engine of growth, but also have become the world's manufacturing hub. How have you viewed or how do you see the rise of China from being, having lived in the Asia Pacific region during this entire period?
Yes, so without a doubt, without China, Australia wouldn't have grown to the strength that it is today. So Australia, over the past 30 years, we've risen, I guess, out of the ashes, I guess, if you can say, gone from with having a very large deficit to having a record surplus. So as we stand and sit here today, our surplus is about in the order of $17 billion. And over the time, over the past 30 or so years, our exports to China have steadily increased. And without a doubt, there's been, I guess, because of the urbanisation, we've seen industrial metals rise to the top, but increasingly we're seeing a large amount of fossil fuels be exported, so than ever before. So it's really quite fascinating to see that I guess we've pivoted, gone back to fossil fuels in a way, but I think the country, in order to be carbon neutral by 2050, our government really wants to amp up our green exports. So when the rubber hits the road, that will remain to be seen. But at the moment, we're really heavily dependent on China. And without a doubt, if you also have a look, speaking about the green transformation, what's really interesting is some fresh data came out from the Australian Bureau of Statistics showing that Australia is the largest exporter of lithium in the world. And 95% of our lithium exports actually go to China. So Australia's relationship with China has really gone from strength to strength to strength. Our largest companies, Rio Tinto, BHP, Fortescue Metals, they make their revenue pretty much 80 to 90% from China. So our relationship with China continues to strengthen, and it probably will over time.
I think there is no doubt that Australia has really been one of the big winners of China's success. And as you said, I mean, it really have been tapping into, at least in the first phase, has been tapping into the urbanization and providing iron ore for the massive steel industry of China. I think actually I would want to go along this conversation with the green transformation, because while Australia has this image of just digging out iron ore off the ground, as you said, I mean, it has risen to become the biggest producer in the world of lithium, and lithium is very much the metal or the mineral we need to generate or build all these batteries for electric vehicles. I mean, so how do you see the future of Australia inside the context of the green transformation? I mean, is it going to be extremely bright? I mean, there's also, I guess, a big potential for solar energy in Australia.
I guess there's a couple of answers to that question. So I'll start with the green metals. So if you have a look at our biggest company, the world's biggest commodity company, BHP, so they're the world's biggest exporter or producer of iron ore, and iron ore being the key ingredient, as you said, in steel. But BHP just, in fact, over the last couple of weeks, announced that they're going to take over one of Australia's largest copper company. So this is another key metal for the green transformation. And then I guess if you look at BHP as a microcosm of it's not a little by any means, but if you have a look at BHP as a microcosm of Australia, if you will, The fact that they've gone into lithium, they've gone into copper, and now they're going into potash, and they want to be the world's largest exporter of potash, it kind of shows you that Australia is aiming to be the world's largest hub of commodities. And indeed, we prove that with the trade war and the geopolitical tension on the back of what happened with Russia. But I think increasingly over time, there is more of a focus on renewables. In a remote area of Australia called Nyngan, they're actually the biggest producer of solar energy in Australia. And I think given that we have a very hot climate, we're probably going to increasingly see more renewables and wind and solar energy come from Australia. But it's just a matter of time of getting that onto the grid and Australia really catching up and probably more so getting ahead of the curve. I think we probably need more government stimulus, and that's really lacking at the moment.
One of the interesting things about investing in China is that as China opened up and the emerging markets became an asset class before the great financial crisis, it was sort of the emerging markets emerged as this new asset class, and everyone got on the bandwagon. And I think over the years, a lot of people invested in China directly, either through ETFs or in Hong Kong stocks, etc. But I think it seems like to me, and maybe you have a different take or you agree, but it seems to me that we have this pivotal, inflection point, I would say, where potentially we're going along a new type of deglobalization because of US and China's rivalry. And inside that, you have seen Chinese companies delist from the US. And I'm just wondering whether actually Australia will be not the best or perfect trade, but one of the better ways of actually still getting exposure to China, but also the green transformation, because it just seems to me that the economic ties between Australia and China are still very deep. And instead of maybe having the direct Chinese exposure, you can get it indirectly through Australia, but you're also getting a bet on something else, the green transformation and the global economy as well. But I don't know how you see that, whether it's a better way of actually playing it through Australia.
Yeah, I think that's a really interesting question. And I think my take on it is I like to see what our clients are doing. And some of our VIPs, for example, some clients who are based in the Nordic region who we help actually prefer to invest in Australian giants because we have the safe, I guess, the safe government, so that backing and that assurance. But in saying that, we do have very large ties and the very large percentage of income coming from China. So, for example, I keep going back to BHP. So BHP makes 60% of their income from China, but you can invest in, say, the world's largest commodity company in Australia, but they're also dual listed on the New York Stock Exchange. And that's an example of, I guess, a company that's got that asset quality, but also dividend security as well. So I guess it's a bit of a peace of mind as well. It's not as deemed by some clients, of course, as risky as investing in, say, a property fund in China, but it absolutely does benefit from that increasing trade. And as China comes out of lockdown, these companies will experience a larger portion of the income going to China, and as a result, a rise in income, rise in earnings, typically drives share price growth, so clients get to experience a growth of capital. So this is something that we see clients taking a view on, that they can invest in China by virtue of investing in Australia.
How do you sense how Australia will navigate this increasing minefield of global politics? Because I would say up until the point of the Trump administration in the US, it was just plain sailing for Australia, right? China was this massive force in the world. It was seen as unequivocally a good thing. And then maybe I would say after the Trump administration, I mean, there were, the friction increased, and there were talk about China in a different way, not only the upsides, but potentially also the downsides. And now we have this deglobalization theme and the friction. And I mean, how do you see Australia navigating this in the future? Because on the security angle, Australia is very much linked to the US. But if we talk money and economics, maybe Australia's future still lies with China. So I'm just guessing it's a very difficult thing to navigate if you're an Australian government.
That's a really good question. I think Australia will remain, as Australians call themselves, living in the lucky country. However, in saying that, we do see a very large portion of some of our biggest companies increasingly pivoting and diversifying their income away from China. So when we did have the tension in China with the US, absolutely that was rightly so an issue for Australia. So as a result, we saw China decreasing their imports of Australian coal, and they also stopped importing lobsters, wool, etc. So Australia pivoted, and the government struck up a stronger relationship with Indonesia, for example. And so large companies, some agribusinesses, some metal and mining giants, they increasingly pivoted and started responding and sending their goods elsewhere. So I guess Australia is quite nimble in a way, quite agile and tactile, and able to send the resources elsewhere. So in a way, we are pretty much, Australia is a lucky country. And our resources are quite vast. So we've got the metals and the mining and the agriculture. People often ask us, some clients ask us, what would happen if China and Australia's relationship completely deteriorated? Will it actually? We have to say it wouldn't be very good. However, over time, you'd think that there'd be a short duration where some of these companies would go into shock, and there could inevitably be a crisis, indeed, for the Australian share market, but also globally, the many commodity companies that are listed around the world, but also have their primary listings in Australia, i.e. Rio Tinto, BHP. But I think over time, the Australian government and these large mining companies would pivot elsewhere. So they've done it before, they'll probably do it again. So interesting question, but let's see if that eventuates.
One of my thoughts have been over the past couple of years is that it's funny how the thing you learn in investing very early on is that the only free lunch you have is diversification, and somehow the global economy and big multinational corporations ended up putting 80% of the world's manufacturing in China, and we got extremely constrained in a very narrow spot of the world. And we've had all the bottlenecks after the COVID pandemic, or during the COVID pandemic, and Australia in the same way has a huge concentration of its wealth and income deriving from a single trading partner. And I think I want to get your thoughts on, because I think it seems like the energy crisis in Europe is opening up a window of opportunity for Australia to actually begin to diversify their economy, both in terms of trading partners, but also what Australia actually is exporting, and that's the LNG. I think the LNG price have gone up a lot, and because of that, the trade surplus have just absolutely exploded. And just, I mean, how do you see the whole? Can Australia really help Europe here, and how big can this LNG market be, and how big a thing can it be for Australia in the future as an income source?
Well, that's the $1 trillion question. So our surplus, Australia's surplus, isn't even in the order of $1 trillion, but our exports can absolutely treble. However, what's really quite interesting is the last couple of trade surpluses, as we were saying, that they've been in record all-time territory. What's fueled the growth is actually fossil fuels. So coal has now become one of our largest growth exports. So unfortunately, it's not really fueling the green transformation. In fact, Australia, you could say, has gone back to the dark ages in some way. However, over time, we are increasingly, Australia is hoping that LNG will outpace those coal exports again. At this pace, it looks like coal will continue to outpace LNG exports. So I don't know if that really answers your question, but...
No, I mean, I don't know if it was a question per se. It's just interesting to get the perspective. To me, it feels like there's room for the LNG, and then I think what the energy crisis here is telling us is a little bit that we maybe need to sin a little to get into the green heaven of the green transformation, right? I mean, we probably need the fossil fuels, and we probably need the coal a little bit longer than we expected just 2 years ago. So it plays into the hand of Australia right now. What's your thinking and what's your thoughts on the emerging markets, sitting from Australia? Because, I mean, if you sit in Australia and you look north, you're looking into the Asia region, and all the big emerging market economies and equity markets are there, India, China, South Korea. I mean, what's the appetite in your part of the world for the emerging markets? Is it still big, or has it come down over the years?
It's absolutely come down. So investing in emerging markets did have a lot of hype some 10 years ago. However, I think with the deglobalization, if you will, Australians have preferred to look within and invest internally. And I think the reason for that is because Australians have an affinity with investing in income producing assets. And so Australia produces the best, arguably the best dividends in the world. And we produce this thing called dividend imputation. It may not necessarily be good so for international clients, but for anyone who wants to drop their income tax, it's quite profitable to do so. So traditionally we do see Aussies, Australians investing locally, and their next preferred jurisdiction is the US. Australians prefer to invest in what they can touch and see. So, the Apples, the Microsofts, the Intels, so all the household names that we speak about, clients really have an affinity for. In saying that, though, you do get some novel companies that are invested in. So, for example, Norsk, for example, so freight logistics companies. But traditionally, it's the Aussie locals.
Are you positive on the future of Australia over the next 30 years?
Yeah, absolutely. So I think we had a phenomenal 30-year run without a recession, and I possibly do think that Australia can go again and have another winning streak of another 30 years without a recession. I think what the driving force is for that is our strong employment. So we have the Australian unemployment rate at its lowest rate since the 1970s. So it's at the lowest it's been for some time. But not only that, we're seeing the Australian government and many of our largest companies pivot to green metals. So I think not only are we exporting more coal than we ever have before, but we're seeing the largest Australian companies invest in the metals of the future, so the green transformation metals. So we're seeing hydrogen investments skyrocket, and hydrogen facilities, coal-fired power stations are being converted to hydrogen facilities. We're also seeing an increase in lithium investment, and also potash fertilizers. So all of these things are needed for the future. So absolutely, I think Australia can stand on its own 2 feet and continue to be, I guess, the brightest light in the commodity super cycle, benefiting from, I guess, hard and soft metal commodity booming.